Hey, welcome in. You're listening to the daily version of the Korelin Economics Report. I am Korelin, and I appreciate you joining me. It is April 18th, Monday, the start of a new week. This program is being produced exclusively for my friends at Kitco, chatting right now with Roger Wiegand. The market continues to be, as I mentioned in a couple of talks that I gave at the Chicago Resource Expo, we are, in my humble opinion, in not the perfect storm for gold, but the eye of the perfect storm for gold right now. I mean, with what happened over the weekend with the S&P rating of the U.S. long-term debt going down, that was announced this morning. Gold is up almost $10 at the close. We are just $3.30 under the $1,500 an ounce level. In my humble opinion, I think it's going to get stronger and stronger and stronger. Silver closed up today, also up 17 cents, $43.22 on silver. There is just too much going on. Flying back from Chicago last night, I was reading, and don't turn this off when I tell you what I was reading. I was reading the op-ed section of the New York Times. I read that because I want to get as balanced a view as I can. Richard Stevenson wrote a great article in there called "The Budget Debate Revealed." Basically, we're talking more than a budget debate here. We're talking about a philosophical change in the political outlook of the United States. Is it going to be personal responsibility? Is it going to be small government, or is it going to be just the opposite? I think that argument is weighing in very, very heavily on gold. And personally, I think the concept of personal responsibility and small government is going to win out. But there is too much stuff going on right now, in my humble opinion, to do anything but be positive for the price of gold in the foreseeable future. Mr. Wiegand, Trader Raj, what say you, buddy?
Well, the S&P rating thing downgrade was interesting this morning. It came before the open, and thankfully I warned our investors and traders on Friday to watch the open before they did anything regarding shares. And what happened basically was the stock market took a tumble because it did not like that at all, and gold, of course, popped and went the other way.
Right.
People were wondering what happened to crude oil because oil went down, but the Saudis did make a statement over the weekend saying that oil was ample, there was plenty out there, so consequently they took that as being a negative, and that price came back a little bit.
Yeah.
But gold and silver today are acting beautifully. We're at June futures now at 14.96. May futures on silver 43.27. They're pretty much following the numbers that I see on my tech analysis. I'm looking for gold to go next to 1498.50, sets a small intermediate blocker, and then 1507. And once we get past 1507, it's going to get really interesting. Our high call for the year for gold is 1607.
For the year?
For the year.
I got to tell you, my friend, I just have this funny feeling we might see it go higher than that. I mean, we are, as we discussed, as I discussed, I guess I should say over the weekend on the weekend special with Jeff Deist, Congressman Ron Paul's chief of staff. I mean, we've got some scary stuff going on right now. And unfortunately, when you have scary stuff of the nature that's going on right now, happening, price of gold just goes up and up and up because people don't know where else to go, right?
That's pretty much it. There's not a lot of alternatives out there. And not only that, but gold has proven its performance solidly for 10 years now.
Yep.
And people wonder if this is now the top, and it's not. It's just the beginning.
Oh, as I mentioned again, over the weekend, I had a broker who I work with tell me last week, or maybe it was the week before last, I'm not getting into gold right now because that's, number one, that's not my specialty. And number two, I think we're in the eighth, the top of the eighth inning of the ball game. And I said, you're crazy. We're just starting out. This is going to be a very, very long ball game. Raj, thanks so much, buddy.
Thank you.